All right, folks, so for today's video, we're going to focus on trading gold, but we're going to be scalping on a 1-minute time frame using a simple supply and demand strategy that allows us to capitalize a little over $2,300 in less than 2 minutes of trading. As always, we'll break everything down in terms of our live trade entries, rules, setups, but while more importantly, keeping things simple. Like and subscribe if you enjoyed today's video and getting value. If you have any questions, reach out anytime, and you can access all of my official contact information down below in the video description. And be sure to check out our valuable trading resources provided, ranging from links to free demo accounts and brokers and profiles that I personally use for trading the gold markets, information of our trading community, my signals VIP so you can follow and copy my own personal trades, automation, much more. Again, all of that can be found down below. So our point of interest was a buy position we had taken here at 29.12, and in order to understand why we took a position in this area, we need to take a look at the markets from a higher point of view. From the 1 hour time frame, we can see that price has been ranging for a couple of days between a level of resistance and support, aka supply and demand. We have these 4 touch points establishing our resistance and these 4 touch points establishing our support. So keep in mind that as a scalper trading off of a 5-minute or 1-minute time frame, it's important that you're mindful of the structure that you see on higher time frames. So even though on a 1 hour time frame price is wedged between our supply and demand zones, why did we buy in this mid-level of the range? Drop it down to a 15. We have a little bit more detail about this correction where we have a long wick followed by rejection, confirming that we have a level of support here. And by stretching this out to the left, we can see that this makes sense for the fact that this was a prior level of resistance that then broke up and then served as support. Bringing this out even further, again, shows you this served as support followed by a break and retest to serve as resistance before it's legged down to our lower demand zone. So coming back to the 1-minute time frame, we can see how our minor support zone is relevant to our point of entry where price came down, tested this level as support. Now, truth be told, this is on a Friday at 8:30 in the morning, which, as many of you know, on the first Friday of every month is the NFP. While you can see a majority of these candles are relatively small, we had this massive spike in price due to the release of the NFP reports. So in other words, we're scalping gold as a result of the after effects of the NFP release. Price pumped after the report with a correction back to our level of support. This is where we enter for the buy at 29.12. Take profit set at 29.18 for a 60 pip target. Why? 29.18 is a relevant level of prior support, which could serve as resistance. Whether you're a scalper, intraday, or swing trader, if you're not monitoring your trades, it's always prudent that you set your stop loss and take profit targets at prior levels of structure. And since we don't know how far price is going to go from our entry, this is why we targeted a prior level of support that could possibly serve as resistance. So as the trade played out, our take profit target at 29.18 was hit, generating a $2,300 profit in less than 2 minutes. And by the way, folks, this was also a trade that we called out for our students and members within our VIP. As you can see from our private Telegram, we sent out this signal to buy at 29.11 at 8:28 in the morning. So this was actually 2 minutes before the NFP release where we had this massive spike. So our students were able to actually get in a little bit lower at 29.11 as a result of the spike and the retest of our support. Whereas you can see price ended up hitting our major resistance zone, allowing our students and members to eventually capitalize over 200 pips in profit. So to bring it all together, we started off by looking at the higher time frames to see what the overall structure is, where we identified price was ranging between the 2 key levels of supply and demand. As we came down to a lower time frame, we saw that price was respecting a zone correlated as prior support and resistance. So when it came down to the 1-minute time frame, we had the NFP release that shot price up and then retraced back to our minor support zone. Since price held and respected this zone as support, we entered for our buy at the opening of the following candle at 29.12, targeting a prior level of structure for 60 pips and over $2,300 in profit. Now in our next upcoming video, we're going to show you how as price continued in this range, we had a bit of a fake out and retest in our upper level of resistance where we took a sell all the way down to our support zone for a 300 pip profit move. We'll break that down in the next video, so stay tuned for that. But I hope you gained some value from today's video that even as a scalper, just by looking at basic concepts of supply and demand will help you better determine where you can enter for your buys and your sells. By keeping things simple, helps you be a little bit more patient, and it also gives you a bit more clarity as you're waiting for price to reach your points of interest. I love doing these videos because it shows you that you can make money in these markets by keeping things simple and not overcomplicating your trading process. This is one of the many things we teach in our trading community, where I share various strategies and concepts which you can apply not just to gold, but any market of your choice.
All right, traders, that concludes our video for today. Hope you gained some value. Again, if you have any questions, reach out anytime. Don't forget to check out our trading resources down below in the video description. If you want to watch any of our recent uploads, you can check out these recommendations. Thanks for watching. We'll see you on the next one.